Hi, this is Palmer coming to you with another forecast from optionspreadtrades.com for December 29th, for the week of December 29th, 2008. We are looking at a chart, a weekly chart of the S&P. As you can see, we have a buy signal from the 8th of December at 895. The markets have traded up a bit and down. They went as high as 918 and they've come back down. They're about 869.50 now. However, as you can see, the stochastics are up, and what we need is the momentum line is almost crossed through the zero line. Not quite. If we do see a cross through this week, what that means is that momentum should follow through and we should head up above the 895 mark. Okay, maybe into around the 920 mark. Okay, this is the daily chart of the S&P. This pink line right here, reddish pink, is the 20-day moving average. Now what we want to see is we want to see a close above the 20-day moving average. That would confirm the bullish trend. That 20-day moving average right now is about 878. Yeah, it's 878. So we want to see a close above that in order to confirm the bullishness. And then if you look here also at the stochastics are turning up. Looks like we're probably going to get a little bit of a bottom. Like we mentioned last week, we are at the beginning of what's called the Santa Claus rally, where during the last 5 days of the end of the year, the markets generally have a tendency to rally. Usually it's the last 5 days of the year and the first 2 days of the new year. The markets would generally rally, giving an average of about a 1.5% gain during this time. Seasonals are not always dependable, but it is something to look at and consider. Like we said, we also do have a buy signal on the weekly, and the put to call ratio on the indexes are also bullish. So there are basically three reasons why we believe this week should be at least a little bit bullish. Again, we have the seasonal Santa Claus rally. We have a buy signal on the weekly charts. Stochastics are up, and also the index put to call ratios are bullish. Okay. But again, longer term, we do believe that we are going to get some selling in the markets. In other words, the markets will continue to fall. So despite the fact that this next week or so is probably going to be bullish, we do not want to be buyers. Okay. The reason being is, if you look at this red line here, these are the commercial, these are the big players in the market. They are continuing to short sell the market. Usually the commercials will get in a bit earlier. In other words, while the markets are going up, they'll start short selling, and then the markets take a tumble from basically the power of their the weight, the amount of money that they hold. Up here we have the large and small speculators. Generally, these are people like the retail investors, small guys that are trading 1 or 2 contracts. Also the larger speculators that might be multimillionaires or something, and are also trading their own money. However, these guys might have a lot of money and they can maybe boost the markets temporarily, but they do not have the sort of big corporate dollars that the commercials have. So if the commercials are continuing to short sell, that's the way we want to go do. Because we don't want to enter as early as they do. So we're going to wait for the markets to get a bit oversold, and then we're going to put on some shorts. Okay. Seasonally, again, this week is generally bullish. Monday, Tuesday, and Wednesday are generally up over 60% of the time on the S&P. Thursday, we do get a bearish day, which is generally down about 67% of the time. And then, of course, Friday is a holiday for New Year's. Okay, so we are probably just going to sit here on the sidelines, let the year unwind, enjoy some of the holiday festivities, drink some champagne. So we will see you in the new year, where we do anticipate there's going to be, looks like there's probably a lot of big money-making trades about to come our way. Gold is seasonally pretty weak during January. Let's see, the oil contracts, crude oil, generally has taken a huge fall from its July highs. It went all the way up to 140. It's now trading at around $37. Seasonally, crude oil and natural gas generally start making a run up sometime around early to mid February. So we're going to be looking at that. That should be a pretty good move. And copper is generally tends to bottom right about now. So we do anticipate that there will be some big moves in the markets coming up. If not in the stock markets, then in the commodity markets. We can buy ETFs on those. Those are exchange-traded funds. We can buy options on exchange-traded funds to get out on those. If you want to join us for some of our money-making trades, please come and see us at optionspreadtrades.com. For the year, even though this last month, December and November, haven't been great, we basically broke even in November. December, we're down about 7 or 8%. But still, overall this year, given that we just opened up in about the end of August, mostly did our trades in September and October, we're up about 30% for the year. So we're pretty happy with that. Most people are down by probably about 20 or 30%, if not more. So we're up 30% for only 4 months. If you want to come join us, please come visit us and take our free trade, our free 30-day risk-free trial at www.optionspreadtrades.com. Thanks a lot. Have a happy new year and happy trading.